Welcome back, everyone. Netflix stock took a very big spanking in after hours. In fact, they dropped over 25%. The share price before after hours and before earnings was about $358, dropped roughly $90 to $248, and just a lot of pain for Netflix. So let's review some details here, and then we'll talk about what I think a fair share price is to pay for this stock. First of all, do me a favor and hit the thumbs up button on this video if you like this kind of content. And if you're not subbed to the channel, what are you waiting for? I usually try to put content out at least once a week, if not more. And I strive to put out content that adds value to the watcher's day. So if you like these kind of financial videos and you want to keep up to date on my content, make sure you sub to the channel. Now moving on, there are 3 things with Netflix that people were looking at when it came to their earnings. 1, revenue growth, as you would always look at for pretty much any stock. 2, EPS growth, which of course that's another thing you always look at on earnings for any company. But 3 is subscriber growth. So let's go ahead and start with revenue expectations. They missed by a little bit, but I mean literally barely missed. Expectations for the quarter were $7.93 billion, and instead they posted $7.87 billion. To me, that's practically a wash. I mean, it's a little bit of a miss, but trust me, that's not why they went diving in the after hours. We'll get to that. Next, we have EPS expectations, which were $2.89 per share, and they destroyed those expectations at $3.53 per share. But it didn't matter that they absolutely slayed on the EPS expectations, because that was completely overshadowed by the subscriber loss. Netflix lost 200,000 subscribers. This is the first quarter where they've lost subscribers in a decade. A whole decade they've gained subscribers. And this is the first quarter they've posted in a decade where they actually lost subscribers. And the reason the drop was so aggressive is because they had an expectation to add 2.5 million subscribers. And instead they lost 200,000 subscribers. So that's pretty bad. Now, for the record, they're claiming that they lost 700,000 subscribers due to suspending services in Russia. So, had that not happened, geopolitical issues, they would have added 500,000 subscribers, still way short of what the forecast was. But nonetheless, that would have looked a lot better than losing 200,000 subscribers overall. They also stated that in an attempt to keep competing effectively with other streaming services, they really upped their spending on original content. This increased content spend translated to hiking prices for the subscription service, so they do acknowledge that they probably lost quite a few subscribers due to price hikes as well. Okay, so overall this kind of looks like a messy situation. Things aren't really going in their corner, and who knows how much it could keep going down and down, but I'm here to discuss now what is a fair price to pay for Netflix. For the record, I thought people were crazy when it was like near its all-time high of like 500 and something. Sorry, my mistake. I had to check in my phone quick. There was actually an all-time high for Netflix of $700 in the year 2021. That's insane. But anyways, back to my point. I thought people were crazy buying it at 500 or more. But let's stick to that all-time high of 700 a share to make my point. EPS for 2021 was 11.24. Okay, so if we take that share price of 700, divide by 11.24 for the year 2021, we'll get a PE ratio that people were willing to pay for Netflix at that time. Let's just go ahead and do that right on the phone. 700 divided by 11.24. Ooh, people were willing to pay a premium for Netflix at that time. The PE ratio would have been 62. So when it was at its all-time high and people were still buying the stock at $700 a share, they were paying a 62 PE ratio on this company. Now, considering that the growth for the company was only 15% in the year 2021, I mean, it's good growth, especially for a big company, but it's not worth 62 for a PE. That's insanity. This is what happens when valuation suddenly doesn't matter because everything's looking so good for a company. Decent growth, great subscriber count growth, at the time anyways, back in 2021 it was. Good EPS, they kept beating. Everything looked really good. So people were willing to overpay. Now we're at a share price of 258. Isn't that kind of funny? At above 500, everyone wants to put their hands on this thing. Now it's at 258 after hours, and people are probably afraid to touch this stock. People are probably selling at a very big loss right now. If you were in this stock anytime in 2021, you're down. The current share price is as low as back in 2018. Now, interestingly enough, after this big drop that happened after hours today, Netflix has dropped to a PE ratio of about 23. I mean, in my opinion, that's starting to kind of get in a reasonable range versus the growth that they have. But okay, let's go ahead and look at all the numbers and see what I think that this company is worth right now. What you should pay for the company. Now, disclaimer, I really like to use the DCF model, discount cash flow model, to value companies, for I feel it's the most accurate way to value a company. To project future free cash flows, discount them back, and you get a fair value for today. But we can't do that because in the last 5 years, Netflix has only had 1 year of positive free cash flow. And that was the year 2020. Even the year 2021 had negative free cash flow. So, yeah, I can't use the DCF model. It just won't work. There's not enough consistency. What we can do, though, is look at the year 2022. We can project the EPS and then apply a PE ratio that we think is fair for the company based on just, overall what premium you're willing to pay on the company and their revenue growth expected, just some different fundamentals that we'll go over in a moment. So first of all, let's get to the EPS, for that is a fairly important number in our calculation. I used Charles Schwab to look at the EPS estimates for the year 2022, and the mean estimates for 41 analysts came out to be 10.97. So is that the EPS I'm going to use? Well, probably kind of close. Do keep in mind that they did just beat EPS for the quarter by like 20%. So the 10.97, I actually want to go a little bit above it, but at the same time, I want to remain conservative. And let's be realistic, they could still miss EPS estimates for future quarters due to the fact that they're losing all these subscribers. Overall, I like the idea for 2022 of going with a flat 11 for our projected EPS for the year. Okay, simple. From there, we just need a projected PE ratio. Now, in general, I do like to base this off just the overall look of the company, the fundamentals, and where they're going with their revenue growth. Now, revenue growth for Netflix is declining a little bit. 2021 was 15%, but your average analyst expects about 12% in the year 2022. And the same for 2023. I mean, it's still double-digit growth, but it's low double-digit growth, and who knows, in the future they could even drop to single-digit growth. I'm going to give you two PE ratios that I think are fair, so we're going to kind of get two different prices here. The first one is a PE ratio of 20. I think that is right in fair value for the company, in my opinion. So if we multiply the projected EPS of 11 times a PE ratio of 20, we'd get a share price of 220. In my honest opinion, I would not pay any more for this company right now than 220. Again, everyone has their own risk tolerance. I wouldn't even consider investing in them until they hit around 220. That's where I feel the fair value is based on this valuation, this calculation that we've done. However, if I'm looking at this in a conservative manner, based on revenue growth of 12%, and just the overall kind of negative sentiment around the company right now, and the losing of subscriber count, conservatively, I'd go with 15. That's what I feel is being safe. I say 20 is fair, but 15 is being conservative and safe. And if we do a projected EPS of 11 times a PE ratio of 15, we get a calculated share price of $165 a share. That may sound unbelievable, but, you can plug your own numbers in and calculate what you're willing to pay based on the numbers that you think EPS will be, what you think PE ratio should be. When I do this calculation, this is based on my own level of risk tolerance. Again, in terms of fair value, in my opinion, PE ratio of 20 puts it at 220 a share. I wouldn't even be looking at this stock until it hit 220, which who knows? Based on the negative sentiment, it might hit that. But personally, I'm more comfortable with giving this a PE ratio of 15 to be conservative. That's just based on everything that's going on, losing of subscriber count. When you're talking PE ratio, there's a few things to consider. One is the revenue growth and where it's going, and it is slowing down and it is low double-digit growth. The other thing is just the overall premium you're willing to pay for a company. When it comes to a company like Apple, the revenue growth is fairly similar, maybe a little bit more, but you're willing to pay a premium on the PE ratio for a company like Apple, well, because it's Apple. Because they're extremely stable and they're growing, and there's just really no negative sentiment around them. I am not willing to pay a premium on the PE ratio when all these negative things are going on with the company. So conservatively, I'd say 15, and that again puts the share price estimated at about 165. Alrighty, that's all I've got for you guys. Let me know what you think down below. Are you thinking of investing in Netflix? What are your thoughts on how things are going for them? Obviously, the sentiment around Netflix is a little negative right now, but let me know your thoughts down below. And remember, if you feel that this kind of content is the kind of content you like, the kind of content that provides value to your day, and you'd like to keep up to date on this kind of content and these kind of videos I put out, make sure you sub to the channel. Okay, that's all I've got for you guys. I'll see you in the next one.